Did you know that the average person checks their bank account over 20 times a month, yet still feels unsure about their financial health? It's time to change that. Today, we'll demystify what AI actually means for your personal finances, showing you practical tools you can use right now to manage your money smarter, save more effectively, and invest with greater confidence. If you're finding value in cutting through the noise, consider subscribing for weekly breakdowns of how finance is evolving. And let us know in the comments, what's your biggest question about AI and your money? Let's start by looking at what AI-powered financial tools are and how they're different from the spreadsheets and apps you might be used to. Think of traditional budgeting tools like a static map. They show you where you've been. AI-powered tools, however, are more like a GPS. They don't just track your spending. They learn your habits, predict future expenses, and can even suggest detours to help you reach your financial destination faster. For example, apps like Digit or Acorns use AI to analyze your income and spending patterns, then automatically move small amounts of money into savings or investments without you even noticing. It's about making your money work for you, effortlessly. Imagine a financial assistant that never sleeps, always learning, and is dedicated to optimizing financial well-being. This is the promise of AI in personal finance. Artificial intelligence is rapidly evolving from a futuristic concept into a practical tool for everyday financial management. Consider the sheer volume of financial data generated daily. AI excels at sifting through this information with remarkable speed and accuracy. For instance, AI-powered budgeting applications like Mint or YNAB can analyze spending patterns, categorizing transactions automatically, and identifying areas where savings might be possible. This automation frees up valuable time and mental energy. But AI's capabilities extend beyond simple task automation. It can provide personalized insights tailored to individual circumstances. Think of it like a financial GPS, constantly recalculating the best route to reach financial goals. For example, an AI investment platform might suggest rebalancing a portfolio based on market volatility and an individual's stated risk tolerance, a process that historically required significant human expertise. Furthermore, AI can act as a proactive guardian of financial health. It can generate real-time alerts for unusual spending activity or flag potential opportunities, such as a better interest rate on a savings account. This goes beyond passive tracking to active guidance, helping to prevent costly mistakes and capitalize on beneficial shifts. In today's rapidly evolving financial landscape, artificial intelligence is emerging as a powerful ally for personal money management. Consider the rise of AI-driven budgeting applications. These intelligent tools go beyond simple expense tracking to truly understand an individual's unique spending patterns. Imagine a digital assistant that learns where money goes, not just by manual input, but by analyzing transaction data automatically. How does this learning happen? These apps leverage algorithms to categorize spending, from groceries and utilities to entertainment and subscriptions, often with remarkable accuracy. Did you know that by 2026, it's projected that over 60% of personal finance apps will incorporate AI features? This AI then identifies trends that might otherwise go unnoticed, like that recurring subscription that's quietly draining the bank account, or the subtle increase in dining out expenses over a quarter. What if these tools could proactively offer personalized savings recommendations based on this learned behavior? This is precisely where AI shines. By adapting to an individual's financial profile, these applications can suggest targeted ways to cut back, perhaps by highlighting areas of discretionary spending that offer the most room for adjustment. It's like having a financial coach who knows the ins and outs of one's personal finances, providing insights tailored for maximum impact. Imagine a financial future where saving happens almost automatically. Artificial intelligence is making this a reality through sophisticated automation tools. These aren't just basic auto transfers. Think of intelligent systems that analyze spending patterns, identify surplus funds, and seamlessly move money into savings or investment accounts with minimal intervention. Consider the concept of set-it-and-forget-it savings plans supercharged by AI. Platforms like Digit, for example, use algorithms to analyze income and spending, then automatically transfer small, manageable amounts from checking to savings when it detects excess cash. This approach, according to a study by the National Bureau of Economic Research, can significantly increase savings rates for individuals who struggle with consistent saving habits. But how does this actually work in practice? It begins with linking financial accounts to a chosen AI-powered savings tool. The AI then learns an individual's unique financial rhythm. Did an unexpected bonus arrive? The AI might allocate a portion to savings. Is there a period of lower spending? More funds could be directed towards wealth accumulation. Isn't it remarkable how technology can adapt to individual circumstances? This intelligent automation takes the guesswork out of saving, fostering consistent wealth building, without demanding constant attention. It's akin to having a personal financial assistant working quietly in the background, ensuring that every dollar has a purpose and contributes to long-term financial goals. The evolution of investment advice is taking a significant leap forward with what are known as robo-advisors 2.0. These aren't just simple algorithms. They are sophisticated platforms powered by artificial intelligence. Consider them digital financial partners that continuously monitor market fluctuations in real time. But how do they tailor strategies so precisely? These advanced robo-advisors analyze a vast array of live market data, economic indicators, and even global news events. Simultaneously, they assess an individual's unique risk tolerance, financial goals, and time horizon. It's like having a market analyst and a personal financial planner working in tandem 24/7. What's truly groundbreaking is their ability to dynamically rebalance portfolios. If market conditions shift, or if an individual's circumstances change, the AI can automatically adjust the investment mix to maintain optimal alignment with predefined objectives. For instance, a study by Vanguard found that robo-advisors can significantly reduce investment costs compared to traditional human advisors, with fees often being a fraction of a percent. Is it any wonder that assets under management for robo-advisors are projected to reach over $4 trillion by 2026, according to Statista? This technological advancement signifies a more accessible and responsive approach to wealth management for many. Artificial intelligence is emerging as a powerful ally in navigating the complexities of financial markets. Consider how AI can act as a vigilant watchdog, scanning vast amounts of data to identify potential investment opportunities or flag impending risks. This proactive approach can be particularly valuable in today's dynamic economic landscape. For instance, AI algorithms can analyze market trends, news sentiment, and economic indicators far more rapidly than an individual. Imagine an AI system detecting early signs of a sector poised for growth, or conversely, identifying potential headwinds before they become widely apparent. This allows for more timely and informed decision-making, akin to having a seasoned analyst constantly monitoring the global financial pulse. But what happens when a significant market shift occurs? AI-powered alerts can provide immediate notifications, enabling swift adjustments to investment strategies. A study by Accenture, 2023, suggests that AI in financial services could increase profitability by up to 31% by optimizing processes and identifying new revenue streams, demonstrating its potential for significant financial impact. This goes beyond simple market tracking. It's about leveraging technology to potentially enhance returns and mitigate unforeseen losses, transforming how financial decisions are made. Integrating artificial intelligence into personal finance is no longer a futuristic concept, but a present-day reality offering tangible benefits. Consider, for instance, how AI-powered budgeting applications are evolving. These tools analyze spending patterns, much like a personal financial assistant observing daily habits. For example, a study by Juniper Research in 2023 projected that the use of AI in financial services would save consumers over $200 billion annually by 2027, largely through fraud detection and personalized recommendations. The first step in harnessing this technology involves identifying the right AI financial tools. This requires understanding individual needs, whether it's for detailed budgeting, automated savings, or investment guidance. Think of it like choosing the right tool for a specific job: a hammer for nails, a screwdriver for screws. Once a tool is selected, the next phase is seamless integration. Many AI budgeting apps, for instance, connect directly to bank accounts, automatically categorizing transactions. This process, akin to a digital filing system, can save hours of manual data entry. Furthermore, these intelligent systems can provide proactive alerts. Have spending in a particular category spiked unexpectedly? An AI tool can flag this, prompting a review before it impacts financial goals. Beyond budgeting, AI is revolutionizing investment. Robo-advisors, for example, leverage algorithms to build and manage diversified portfolios based on an individual's risk tolerance and financial objectives. A report from Statista indicated that assets under management by robo-advisors were expected to surpass $4.5 trillion globally by 2026. This data-driven approach aims to optimize returns and minimize risk, acting as a sophisticated co-pilot for navigating market fluctuations. Navigating the digital landscape of AI financial tools requires a mindful approach to data privacy and security. Consider this. The average American household is projected to spend over $1.500 more annually due to data breaches, according to some industry estimates. Understanding how platforms protect sensitive financial information is therefore paramount. When evaluating an AI financial service, look for clear statements about data encryption, both in transit and at rest. Transparency is key. Reputable providers will detail their security protocols, much like a bank explains its vault security. For instance, many offer multi-factor authentication, an extra layer of defense akin to needing two keys to access a safe deposit box. But how can one practically assess these measures? A good starting point is to review the platform's privacy policy, often found in the About Us or Security section of their website. Does it align with established data protection regulations such as GDPR or CCPA? Furthermore, what recourse is available if a security incident occurs? These are vital questions to ask before entrusting personal financial data to any AI-powered service.